Natural gas prices open the week with a sharp gap lower, as traders shift their focus toward the approaching spring season. With demand expected to plummet in the coming weeks, bearish sentiment is taking hold. Last Friday, forecasts projected colder than expected temperatures into early March, supporting prices. However, the latest weather forecasts for March 2nd to 10th indicate significantly warmer temperatures, and if this trend persists, prices could face further and more pronounced declines. However, given the tendency for weather forecasts to shift over time, price action may not be entirely one-sided. We could see intermittent rebounds on the path toward the $3 target, as traders adapt their strategies. The previous buy-on-dips approach may gradually transition into a sell-on-rallies mindset, with market participants capitalizing on short-term bounces before resuming the broader downward trend. Given all these factors, it's logical to expect a rapid decline in demand. Additionally, it's important to note that in just 2 days, on February 26, the market will roll over into the April contract, which could further influence price dynamics. Moreover, this week's storage report will be a key factor to monitor, as the expected withdrawal is nearly twice the usual amount for this time of year. However, since this bullish expectation has already been largely priced into the recent price surge, any deviation toward a smaller than anticipated draw could be met with strong negative sentiment. If the reported number falls short of expectations, traders may react swiftly, potentially triggering a sharp sell-off as the market reassesses demand and supply dynamics. If the current downward trend in natural gas prices remains intact, the coal ETF, which benefits from falling gas prices, could see a strong rebound toward the $30 mark in the near future. With bearish momentum building and technical indicators suggesting further downside potential, short traders may continue to drive natural gas lower, fueling additional gains for KOLD. Meanwhile, WTI crude oil futures inched higher to $71 per barrel on Monday, recovering slightly from Friday's 3% decline, though prices remained near yearly lows. Investors are closely watching Ukraine peace talks and the potential resumption of crude exports from northern Iraq, both of which could influence market sentiment. EU leaders are set to hold an emergency summit on March 6 to discuss additional support for Ukraine, while Ukrainian President Zelensky has indicated a willingness to step down if it would help secure peace. Meanwhile, US President Trump has initiated direct negotiations with Russia, bypassing both Ukraine and the EU, with further talks expected this week. Although an end to the war may not lead to an immediate increase in Russian crude supply due to OPEC production limits, it could still weigh on prices by improving overall market stability. Additionally, Iraq is preparing to restart operations on the Iraq-Turkey pipeline, potentially adding 185,000 barrels per day to global supply. From a technical perspective, a bearish signal has emerged as prices slipped below Friday's low of $4.15. The next critical support level is around $4, aligning with the 50% retracement of the recent uptrend. If selling pressure intensifies, the next downside target could be $3.70, or additional support may come into play. Overall, sentiment appears to be shifting rapidly from bullish to bearish, with price action reflecting growing downside risks. The formation of a shooting star at the peak of an uptrend further reinforces the potential for a deeper pullback. Could natural gas prices extend their decline and test $3 in the near future? Drop your thoughts in the comments below. Please like, subscribe, and comment to support the channel. See you in the next one.